Hello, and thank you for joining. I'm Mark Porter, CEO of HWNI Networks, and alongside me I have Chris Sorensen, Executive Vice President of Finance. We're here to talk about the second quarter 2022 financial results. I want to apologize for being a little bit tardy on getting this out this quarter. We had some pressing business travel that kept me out of the office and unable to get this done. So it is important to us to be able to go through the discussion and analysis of the results with you in a little more granular fashion. With that, I'll turn it over to Chris to talk about the financial results, and then I'll provide some commentary on the quarter and a little bit of outlook for the rest of the year.
Thanks, Mark. As usual, we're going to talk to the previous year's comparison numbers on a pro forma basis. Over the last 18 months, we've had a few acquisitions, so pro forma makes those the most comparable. Just to start, Q2 of 22 finished with $13.7 million of revenue. That's on a comparison of Q2 21 at $9.5 million of revenue. That reflects a 44% increase year over year. So obviously some very nice growth on the top line side. And then the bottom line net income came in at $5.37 million. Last quarter I was talking about the trend of top line growth that we've seen now over 4 quarters in a row. And just to reiterate those, that's a Q3 of 21 increase of 20% year over year. Q4 at 41%, Q1 at 82%, and now this quarter being 44%. So some very strong performance on the top line. As Mark has laid out in previous earnings releases, we've had a heavy focus on kind of growing the business, really on financial performance. It all starts at the top line. And just to kind of dive into that a little bit further, at the start of this year, we broke up our revenue buckets really into 2, one being technology, and then the second one being managed services, primarily because managed services tend to be contractual based and reoccurring revenue. So one thing I'd like to highlight on that is that our year over year managed service revenue has seen an increase on growth year over year by over 50%. So very strong performance on an area that is a high strategic value to the company. And so we expect to see that continue into the future. One of the other areas, which is also a component of that managed service revenue, is our Overwatch cybersecurity business, which we also mentioned this in the press release, that year over year, June, we saw over 300% increase on that business. So sales team has performed very strong. Again, our strategic focus is at getting very stable and easily identifiable reoccurring revenue. And so we've seen that group, our sales force, really come through for us in that area. So it's very strong performance, and we expect that to kind of really reiterate our end of year growth on a year over year basis of 30 to 60% increase by the end of 22. Mark, I'll turn it back over.
Cool. Thanks, Chris. One of the things that I wanted to touch on, I want to touch on a couple of common questions that we get asked from the investor community, a little bit about what we do, a little bit about why we're doing certain things, and a little bit about where we're going. So I'm gonna kind of go through them in no particular order, but I want to start with the managed services business and our Overwatch business. Managed service business has a couple of key components to it. And as Chris mentioned, these are contractually driven engagements. They tend to be years. Some have gone on for decades and continue to grow. As we bring these programs in, they not only continue on year over year, but they generally will grow in scale and size because of the indirect nature of our business, where we don't work directly with an end customer. We work with our channel partners to bring in their customer base. The lifetime value of our partnerships is very strong. So if our customers grow at 30% and bring all of their clients to us, that's phenomenal. We will see growth with them. So we grow by not only acquiring new customers in those spaces, but by working with our partners to help them expand their services and grow. If a managed service provider selling our Overwatch portfolio does $5 million a year in revenue on their managed services and can add $1 million of Overwatch to it, that's significant growth to them. If they can do that year over year as they grow their customer base, we get the rising tide lifting all ships. So we grow in multiple ways in that business. Another scenario that we've been focusing on that's really starting to come to fruition is crossover sales. As we look across our customer base, I always talk about we always start with the customer. If we're going to do an acquisition or we're going to pick up a new product to bring into the portfolio, do we have the customers for it? Because I'm not interested in creating a new customer base. That takes too long. Now we're focused on we have multiple different channels across our business. And over the last year, we've been working very hard to cross-pollinate those relationships. And we're now starting to see that bloom. What will be the next series of drivers for our managed services businesses? And this is Overwatch, regular network managed services, managed personnel deployments, managed programs at scale, global in nature in terms of deploying for some of the largest businesses in the world, all of those drivers. What's going to take those to the next level is that we're getting into much larger and longer duration agreements. The company is able to support some of the largest scale deployments that are out there available in the marketplace today, and our expertise and credibility at delivery is driving those things. Our marketing, we track every marketing dollar spent in each channel that we spend it and look at the return on investment, and we continue to focus on that. We look forward to being able to put more money into those things. So as we go forward, the size and the scale of our operations continues to grow, and the magnitude of what we're able to take on is important. So what does that mean to the rest of this year? As Chris mentioned, we've had four continuous quarters of growth. We expect the fifth quarter of growth in terms of top line in comparison to prior year. We expect fourth quarter will also grow over prior year. When we look at our business, there is a seasonality to our business. So for those who are concerned about whether or not we're on track, we believe very strongly that we're on track to meet or exceed the growth that we stated previously and that Chris just reiterated. Important to note in that is that the guidance was given prior to the divestiture of our electrical division. So that does subtract from the top number. But in terms of percentage on ongoing operations, when you take out discontinued ops, we're very confident that we are on track. So our funnel has continued to grow. Sales funnel is very important. Our near-term conversion of large-scale deals, we expect some significant ones in the very term. Anything can happen, but we're real optimistic about setting ourselves up for a very strong 2023, and that's an even more critical juncture. One of the other questions that we get asked a lot is about our forward-looking plans and our previously stated goals of moving to the NASDAQ. I will tell you that we work every day on the right options for the company, making sure that we're doing the right thing in that realm, and ultimately doing it at the right time. That's driven by a whole bunch of different factors, not the least of which is what the market is doing and the appetite for the market, and making sure that it's done in a way that's the best possible scenario for the shareholders, because simply just moving to NASDAQ does not ensure a great victory for the existing shareholders. We want to make sure it's done at the right time and at the right valuation. So address that topic. When we look at our cybersecurity business, we could not be more pleased with what's going on there. In addition to the growth, it's not just the growth in revenues and recurring revenues in particular, because that's an all recurring revenue business. It's a growth in the quality of the partnerships and relationships, a growth in the size, the average size of the deals that we're doing, and a growth in the type of clients that we're servicing. We're servicing some very, very large organizations now. We're also moving very significantly into state, local government, and K through 12 education markets. And we're doing that not just because those are bigger deals in a lot of ways, but because it's a little bit of a mission-driven expansion for us. And we have some partners who have tremendous opportunities in that space. We believe there's an opportunity to do well and do good at the same time in those spaces. So we have a very substantial funnel in that space across a number of states and a number of government entities, and we're very excited about where that brings. The reason that we feel that our message is resonating in the Overwatch market is because we've made substantial investments in technology. While we're not in the business of building the software that drives these things, what we are in the business is of building the engine, if you will, that delivers these services at scale. And to do that, we need to make investments in both third-party technology as well as our own systems and our own technology and the personnel to develop some of our own intellectual property, which is a lot of APIs and scripting and the things that glue all of this together and bring it together in a way that allows us to show up differently for our partners and their customers. And how we're doing that is driving to what we call the top of the stack. We made an announcement recently about our SOAR capabilities. To boil that down very simply, that's orchestration and automated response capabilities. So we're able to take things that normally our staff would do, and it might take 5 minutes to go out and sequentially look at a series of different data points to decide if something is benign or malicious. We're now able to have that presented to the agent in seconds. The machines can do that in parallel and do it 1,000 times in the time it takes an agent to look at one specific incident. We can then automate the capabilities of communicating with our partners or their end customers to decide if we want to do something about it, and then automate what is done in response to that. All of that can happen with a single click by any of the parties engaged. And so we can move large amounts of information in very time-sensitive data very quickly. This allows us to deliver at a scale and scope that we couldn't a year ago. And in another year, it'll be even broader and more sophisticated. Every day we're getting better at this. It allows us to meet our clients exactly where they are. It allows us to meet them in the middle of their journey, at the beginning of their journey, or in the late stages of their journey in cybersecurity. So our team has put together a really impressive solution, and it is resonating in the market. Candidly, we're very fortunate that demand is high, and we will continue to work to make sure that we can accommodate all of our partners. Our marketing team is working very hard on their messaging and on different ways of generating demand. They continue to do a phenomenal job generating as much demand as we can handle at any given point in time. It's important to note that we believe in our managed services businesses that they are marketing driven as opposed to sales driven. And the difference in that is scalability, repeatability, and expense. If you're doing it via marketing and you can have a loud, clear message, we can be much more concise. We are targeting partners as well as end customers who we can refer out to our partners. So we're generating demand for them. We're targeting them early in their journey. And in this day and age of the internet, most potential partners or customers are somewhere in the neighborhood of 75% through their journey before they ever talk to a human being. So we're out there targeting people who we don't even know are looking for us, and it's working. So that Susanna and that team has put together a phenomenal approach to how we're doing it. That is much more scalable than hiring salesperson after salesperson after salesperson and waiting 12 to 18 months to see if they pan out. We generate the demand up front and have an efficient sales capturing machine. We've built an inside sales team that's done a great job of assisting the outside sales teams with it. And then again, talking about crossing over across existing customers in different channels and different types of programs and bringing our services to bear with existing customers is really accelerating that journey. So a little more detailed explanation as to some people asking, how are we going to grow? Why are we growing? Wanted to make all of that clear. We've also expanded our managed services roster. We've always offered managed services to different degrees outside of just Overwatch. We continue to expand our capabilities in that realm, offering managed network services for our partners to be able to sell on their own. It's a very adjacent thing to our Overwatch managed security, and something that we expect to continue to pick up. We've had some major wins in the last 60 days, and expect to pick up some very significant revenues from that as we go into the second half of the year. It'll start to be material. So that's another way that we're expanding. We are doing everything we can to work on our cap table. Sorry, we talked about that at the end of last quarter. The business is in a position where we had to grow our way out of it. We have grown to the point where things stabilized quite well across all of the operating units, and that is one of the great news stories, is that every operating unit is in growth mode. Some of them are very small, some of them are very large. They are all growing, and they are all moving generally in the same direction, leveraging the same systems and leveraging common management. So that was a big milestone in our first year to get that done. We are doing everything we can to work on the cap table. I don't want to go into too much detail to that, but I know everybody would like to see it happen faster. It is a web of covenants that we have to be very careful as we work our way through, because we don't want to trip any covenants that could create challenges between the different lenders that are out there. So we're working on it. We hear you, and it's something that Chris and I and the rest of the finance team spend an awful lot of time on. I'd like to spend more time on growth and product development than I get to, but that is something that we spend a lot of our time on. So thank you all for your time. Thank you all for those of you who are shareholders. Thank you all for your investment in the company. We are continuing to work on our long-range goals, and those long-range goals are building a company that sustains itself with largely recurring revenues, high profit margin services around in those recurring revenues, and a company that will continue to grow for years to come. So thanks again. Appreciate your time.